Assalamu alaikum, and the topic is intangible asset IAS 38. Intangible asset IAS 38. So what is this about? Intangible asset IAS 38. Another accounting standard that is asset based. That is asset based. Intangible asset. One moment, please. Intangible asset, and specifically that's the non-current asset, IAS 38. We should have to make up or prepare a mind before this accounting standard. For example, in our mind, the intangible asset like goodwill, software, copyrights, development cost, intangible assets, research. But although some complications with respect to the research by IAS 38, these are some examples of the intangible assets. Okay, these are some particular examples about the intangible assets. So once again, intangible assets actually originated with the conceptual framework, that's the term asset. Okay, that means some future economic benefits expected from this intangible assets. Okay, but the nature is intangible. Its nature is intangible, like software, copyrights, goodwill, patents. And normally it's not for the purpose of the sale. It's again for some business purpose, business usage purpose. It's for some business usage purpose. For example, software. If a company made a software for its own use, for example, a bank use a software for the sake of the administration purpose or for consumer interaction purpose, that is the business purpose. Yes, do remember one thing: if a software company make any software and available for sale, that is not for the business usage purpose. That is something else that we will discuss in IFRS 15 revenue. That's not about the IAS 38 aspects. It's very much, it should be very much important. And in fact, we can also connect this matter with the development cost. If a pharmaceutical company establish a formula and patronize the formula to generate the income, so that's development cost. It meets the 38 criteria. It's intangible asset because of future economic benefit. Like the goodwill, it's an intangible asset. It's another question: either the individual books goodwill can be recognized? Of course not. But by IFRS 3, goodwill by business combination can be recognized. So the important point is that it's for the purpose of business usage. That's important. And normally the life is more than important. Life is more than 1 year. More than 1 year. That's we will conclude with a non-current asset. And of course, this is this should be with meeting this particular sequence. Number one, definition. What asset we will consider or or considering with the respect to IAS 38 if it meets the definition. If meets the definition. And definition with respect to the recognition criteria. Yes, with the recognition criteria. Very important aspect. Very important aspect with respect to this definition. An identifiable asset without physical substance. The most important thing is the term identifiable asset. The most important thing is the term identifiable asset. Identifiable asset. Actually, and the recognition criteria, it's probable future economic benefit and cost can be reliably measured. Actually, we can consider the definition and recognition criteria as follows. Number one, intangible asset. Number one, control by entity plus identifiable plus probable future economic benefit plus value reliably measured. So all these three or these four criteria should be met. And one by one we need to consider important. Control by entity is very simple. That's owned. Probable future economic benefit, that's very simple. It's expected that we will generate them benefits. Value reliably measured, that's also simple. Its value at initial recognition should be measurable. But the important point, extra point, it's identifiable. What does that mean, identifiable? Actually, the term identifiable having two possible aspects. Either we purchase separately or it's imbued, or part of any other asset. Purchased separately, like you can take an example. For example, you are a bank and you purchase a software, that's you are legal entitled, and you purchase it separately, and you have to book the software in your balance sheet, in the accounts, as intangible asset. Software, you purchase a copyrights separately. You purchase a copyright for 3 years for the publishing the books. You purchase the patents, that's intangibles. And you can say that you purchase a subsidy and recognize the goodwill. Or please, for the timing, it's ignore goodwill for the timing. It's individual books. What about the part of any other asset? Part of any other asset. What we can say that? Part of any other asset. For example, you purchased a business. Candidates, listen carefully. This is a very critical point, and it's already examined in the SBR exam. The second part. Parent purchase a subsidy. Parent purchase a subsidy. And subsidy, individual books has no goodwill. And it's good, it's right, because goodwill cannot be identifiable or measured separately in the individual company. For example, McDonald's having a goodwill, but the goodwill value cannot be measured reliably until unless the ownership of management of the McDonald's taken over by any other company. Then you can identify the value of the goodwill. Otherwise, it's not possible to calculate the goodwill individually. But the goodwill is embedded in a part of the business in individual. But once consolidated, it's become identifiable. So basically, it's part of the business, but separately identifiable once become sale or purchased by another party. But the another very critical example, you all know that with respect to that 7, the goodwill and its family member, like brand, image, customer data, customer satisfaction, or customer base. So these are the family of the goodwill, like brand, image, customer footfall. These are the part of the goodwill. Normally, for example, the brand cannot be separately identifiable because it's a part of the goodwill. But if it's possible, we purchase any subsidy and we have identified the goodwill. Goodwill includes brand, but based on some valuation prospect, we have identified the value of brand as well. Then we can isolate the brand from goodwill because it's now become identifiable. although it's part of other asset. That other asset is a goodwill. But once the value reliably measured, it's become identifiable. Brand identifiable. So part of any other asset, I have given two examples, but both belongs to consolidation. One another example. One another example. For example, you purchased, you are a bank and you purchase 100 ATM machines. It's a very value item. For example, $1 lakh, $1 lakh for each ATM machines. 100 machines. That means $10 million. The total transaction value of the 10 million. Normally, ATM machines is a part of the property plant equipment because it's considered as plant or equipment in the banks. But you have noticed that you have purchased all the ATM machines from a vendor in the China, and that ATM machine includes two things. You have paid to the vendor for two things. Number one, the ATM machine, and number two, the operating system by default entered into the ATM machines. The operating system, the intangible operating system, it's a part of that ATM machines. And now, if a company has an ability or has a data that isolate for the whole transaction between the equipment hardware cost and the software cost, that means we can identify the operating system as an intangible assets as a separate identifiable unit. It's a part of the total transaction, and it may be identifiable or it may not be identifiable. That is important. Yes, there may possibility that we can identify the value from the vendor, or there may be possibility that we cannot identify the value from the vendor. If we cannot identify the value from the vendor, that's not possible to separately identify the value of intangible assets. And the value of intangible remains the part of the property plant equipment, that's because we cannot reliably measure. So it's possibility. Candidates, for example, you are a company and your company have made a mega investment for the technology. The term technology has two components. One, hardware, number two, software. Normally, whenever the companies make an initiative for the mega infrastructure change by technology, so normally technology hardware costs as a part of IAS 16 and separately identify the value of software or other operating system values like SAP installations and any other Microsoft Dynamics and any other customized made softwares. Although it's embedded in the hardwares, but the value is separately identifiable. So sometimes, concluding this point, sometimes intangibles purchased separately or it's a part of any other assets. Part of any other asset. By the way, we can also discuss a term. It's a separate part. A term. Website. We can also use the term website. What we can say the term website. Accounting standard IAS 38 categorically mentioned that. If it's only for advertisement purpose, only for advertisement purpose. For marketing or administrative purpose, charge to P&L. Immediately charge to. But if it's a core area of business, core area of business, then should be capitalized by IAS 38. For example, I have a business of the dry clean, for example, and chain of dry clean shops, and I have made the website just for the marketing purpose to show that I have a website. I'm not making any transaction on the website, no e-commerce. That's simple. It's not the core area of the business. That website is just for marketing, immediately charge to the P&L, because future economic benefit is not certain in that. But what do you say about the term website of ACCA? ACCA, what do you say about the term website of the ACCA? What do you say about the term website of the Alibaba.com? What do you say about the website with respect to the Amazon.com? That is the core business area, core supportive area of the business, or the ACCA, because all the business transactions involve and the business activities involved with the websites, Amazon, Alibaba.com, like this. So that should be capitalized. That should be capitalized. So it's very judgmental area, either to capitalize or not. So this is what all the part of the definition aspects that we have discussed till now. I hope that you are enjoying the lecture. And with this aspect of the IAS 38, you should not consider this as a boring, because examiner, one of the favorite topic is IAS 38. Almost the 25 marks of September 18 question 3 is based on this IAS 38, including conceptual framework we will discuss later. So it's not about small or big standard. All standard weightage are important. Okay, next thing. So this is what the definition and recognition aspects. When we will become recognize the intangible assets, or as a part of definition, that's it's identifiable non-current assets, intangible, controlled by entity, probable, future economic benefit, and value reliability measure. That means we have to recognize that asset as an intangible asset in the books. So now, what about the term measurement? Measurement, yes, of course. Cost model and revaluation model. Sir, it's same as IAS 16, but there are very rare usage of the intangible asset as a revaluation model. But it's acceptable if its value, then go for revaluation model. Go for the revaluation model. For example, it customized softwares. No, not possible any revaluation model. But for example, you are a brokerage house and you have purchased the stock exchange membership. That's a millions of amount. Stock exchange membership, or the membership of any business club. Membership of any business club, and that's considered as intangible asset and having the market value. Having market value. In Pakistan, the stock exchange market value, it's more than 100 million rupees. It's more than 100 million rupees. Sometimes it's 1200 million rupees. So, and its market value fluctuates stock market values, stock market membership values. NYK millions of dollars membership fees and having a fluctuating market value. So it's possible that intangible has market values. It's possible. Yes, it's possible. If it's possible, then go for revaluation model, same as IAS 16, including impairment tests as well. Including impairment tests as well. Yes, this is important. But do remember one thing, intangible assets, IA intangible assets, has finite life or we can say defined life. Definite life. It's very simple. Or it may possible that indefinite. Indefinite life. It's possible. Like infinite life. Like goodwill, business club membership. It may be definite or its possibility infinite. Both as are possible. Goodwill. So do remember one thing. If any intangible asset having infinite life and you are putting cost or revaluation model, whatever the model you will use, do impairment test not on the basis of or not subject to the or not on the basis or subject to the impairment condition. No. It's exclusively for the intangible asset having infinite life. You have to test impairment on yearly basis. I'm not saying that do make or charge the impairment loss on yearly basis. No. Test impairment on yearly basis. And this one we have already discussed in IAS 36 spec. But it's very simple. It's like F7. So it's measurement aspects and measurement initial as well as subsequent. No issue at all. The next thing is furthermore classification intangibles. Classification intangibles. And you know that the classification aspect, what does that matter in the classification? The aspect of the classification, the aspects of the classification it's like it's intangible asset, it's a non-current until in life its life is about to end by next 1 year. That's the current asset. This is important. And disclosure, it's simple. You can read from the handout. It's very simple. But do remember one thing. Whatever we have studied till now, it's one part of IAS 38. The another part of IAS 38, that is research and development cost. research and development cost. First of all, candidates, you must have to consider one thing. This is intangible asset and what to do for research and development costs. What is the difference between research and development? Number one, what is the difference between research and development? Research means primary investigation. Primarily investigation. That is research. But application of PI primary investigation is basically development. It's basically development. So this is the important part. We can discuss this point as an example. For example, feasibility study. Is the research phase. But once we have done feasibility study, application, because for example, let's take an example. You are a telecommunication company. And you have a plan to expand the operations in one more city. And you have hired a team and have given the task that go and identify the potential of that particular area. Develop the feasibility study. Is that justified or not? That feasibility study is a research part. For example, after 3 months, the study completed and presented to the board. And the management has decided, now okay, acceptable. Now apply the study. So that application of the study is considered as development cost. Even though I'm not saying that application of a study or development must be capitalized. No. I'm not saying that must be capitalized. We will discuss with respect to IAS 38. Right now, I am only clarifying the difference between research and development. Then we will consider the IAS 38 rule about the research and development. That is the clear that is what I'm going to discuss. Development and research differences. Yes, one more thing. Yes, in the development phase, if the development phase includes further research, that's count as a development. Let's take an example. Number one, you are a telecom company. Your team initially phase for the feasibility study of the expansion of your services in a city. That's the research phase. After 3 months, research done, and the management board has decided, go and apply the study. But when you applying the study, making further research, for example, how much towers for the connection towers should be installed in that particular city. Either 100 towers, 150 towers, network towers. So that network towers further feasibility is a part of the development, because it's the application of the study. So don't confuse the word of the research and development. Actually, the theme of the research is the primary investigation, And the theme of the development is the application of the primary investigation, even with the name of the term research or development. That's the important thing. That's the important thing. Now, what IAS 38 says, IAS 38 clearly says that if something is primary investigation, if something is primary investigation, that is the research feasibility study, immediately charge to the or not to capitalize. Charge to income statement. But if something related to development costs, so must consider the capitalization criteria, that your development cost first need to consider the capitalization criteria. If it meets that capitalization criteria, go for capitalization. Must go for capitalization, no option. If not, charge to the P&L, no capitalization. And yes, that's you have been studying since F3 or earlier part of your study. That's the conditions. And the mnemonic is pirate. That is number one, probable future economic. Whatever the development cost, you must have to consider that. Is the development expected having some probable future economic benefit? Number two, the management has intention to complete and use and sell. Then the resource are adequate to complete and usefulness. Then ability. Then technical feasibility. Then measured reliably. The value can be reliably measured. That's the pirate conditions. All 6 criteria should have to be met. Any one criteria not going to meet, you have to expense out the capitalization. More focus about this point. For example, 2012 to 2014, 12, 13, 14, 3 years research, charge to income statement, no doubt about it. 2015 start and your development continue, and it will take, for example, 7 years to complete. 15, 16, 17, 18, 19, 20, 21. 2021 till to, for example, here all criteria meet for the development. All criteria meets for the development. At that point, development criteria meets 2015, 16, 17, 18, for example, till 2018. All criteria meet. You have to capitalize. But in 2018, there are some question mark. For example, economic conditions are now become downwards, and your financial conditions become worsening. So that means your ability is now become question mark to complete this development or not. Or more, before your launching of the product, some competitor already entered into the market, and now the future economic benefit is question mark. Any of the reasons in 2018. But you are committed, your company is committed that you will move on. Yes, company is committed to move on, but whatever the capitalize, you have to expense out. You have to expense out all the capitalize, expense out. All the expense. It's a retrospectively effect. For example, 2018 after 2019. 2019 same situation. But you have continue, you have still continue. You still move on slowly. So whatever the extra expense, 2019 extra cost, you all previous to the expense, to further not meeting the criteria, expense out. 2015, 16, 17, 18, 19, 5 years has gone. Now 2020 come up with the new energy, new decade, new year. Your management taken initiatives for the financial capability to counter the competitor, so on. And now from this time, your development criteria now meeting. So do remember, whatever previously done to the expense, it's not possible to revert back. It's never ever possible. You will capitalize, but prospectively. Capitalize prospectively. And you are going to make a successful years 2021 and 2022. You have done your development cost. So in the 7 years of journey, previously whatever the expense out, it could not be possible to re-energize with the capitalize or recapitalize. Only this portion, that's capitalize. That's important. Another point, sir, once 2022 done, our development has completed. Candidates, ask yourself, do you ever think why the company investment in development? Have you ever asked yourself why the company invests in development? What the expected future economic benefit? There are two possible future economic benefits possible. For example, if you are a pharmaceutical company and you have research and then 3 years research, 7 years development, 10 years has gone, and you have developed a formula. So what is the expected benefit? There are two possible benefits. Number one, you will use the research and make your own product. That is usage. Make your own product. That is usage. Or you have developed some intangibles cost either pharma or any other company, and then using internally for cost saving. For example, Microsoft has research and developed, Google has research and developed for supporting the business of search engine, for the purpose that search engine works more better. So that's development is for the internal use purpose. Either development for using internally or for the purpose of sell. My two examples, in this case Google search engine for administrative use, or pharmaceutical company development and then sell the products. That means development for the usage purpose. But it may be possible that pharmaceutical company has made a development and then they will not use internally either for sale or use. They will patronize the product. They are going to patronize the development. For example, you have medicine company, you have developed a formula of a medicine, and then you are not making the medicine by yours but giving the patents to other pharmaceutical company. That's you can use this formula and give me the royalties. That means to sell. That means to sell. So whenever the intangible asset aspects with respect to research and the development, you have to consider one thing. And consider what? Consider that thing. Future economic benefit, either in term of internal usage or future economic benefit in term of selling the development aspects by patronizing the development. And then sometimes the pharmaceutical companies develop and sell the formula as well. So that's also considered as a sell aspect. So this one is done. This point is done with respect to the development. But the last thing. Once development done, here 2022, then you will develop, use it. Then the concept start to amortize. Once development complete, for example, its life, it's become 10 years, then it's become amortized, as well as impairment as well. Impairment test. This development, like normal intangible asset, we will use it by cost model or revaluation model. Normally, revaluation model is very rare case, but cost model, amortize and impairment test. Candidate, one important thing to consider here, very much important point to consider here. Sir, during period, when development cost is capitalizing this period, we will not allowed to amortize because it's in the development process. But is it possible for the impairment? Yes, it's possible. If there is some issues related to development cost impairment aspect, we have to check the impairment or test the impairment carrying amount versus recoverable amount, and then if there are some impairment loss qualify carrying amount greater than recoverable amount, that should charge the impairment test. That should charge the impairment loss. So this one is about the development, research, development, all the things. And you can, it's all about F7, huh? It's all about F7. You can read the complete handout of this point, of these aspects with respect to the IAS 38. But before ending my session of IAS 38, one important thing you have to consider here, and we will discuss with the specimen paper as well. Candidates, very important discussion with respect to the SBR paper, particularly to 38 and 16 and all that. It's my journal discussion. although belongs to this accounting standard, but it's very important. Why accounting standard are so much concerned for any asset presentation or liability presentations with a strict criteria. For example, intangible asset, development cost, very strict criteria. You know that development cost is also an asset, and normally normal asset, for example, property, plant, equipment, or intangible other than development cost, don't have 6 conditions. Development cost is also an intangible asset. Software is also an intangible asset. But what about the recognition criteria of software? Identifiable, future economic benefit, value reliably measured, control, normal. But why development cost having this strict criteria? Because candidates, the issue is that who we are as a professional accountant, ethically, professionally, we have a responsibility for the transparent reporting of the financial statement. I'm giving this example one another time. If for example we are you and me are the financer of the company. So financer as a debt or as an equity. Financer, yes. So we are not participating in the management of the company, in a listed company. So actually we got the annual report and we will consider this, yes, whatever we have contribute the finance as a debt or as equity here. But what is the justification of this finance? Where the company has invested, that's the asset. For example, non-current asset. This is the mirror effect of finance. That is property, plant, equipment. That is intangible asset. So if you feel that if an accountant as a professional accountant reporting property, plant, equipment to the financiers, so it's basically showing to the financer that yes, your financer is safe because we have purchased the property, plant, equipment, and that property, plant, equipment provide the future economic benefit to you. Don't worry, and you will get return from the income statement. Same, your finance is justified for intangible asset, for example software. It will provide to you the benefit and its return. Same as the development cost which is under process, for example, which is under process and 2020 is ended, it's under process, and professional accountants should have to judge or assess very critically, is this development cost has an ability, management intention, technical feasibility, future economic benefit, value reliably measured, all this 6 condition assessment, that this development expected to be complete and provide benefit to these finance provider or not. So candidates, we are not here to just get the knowledge about the accounting standards. Mature your mind. Our paper is business reporting. One of the component is about the knowledge of accounting standard. But why we are here to discuss this? For the purpose of reporting. Same as it is, after some class we will connect the matter with the ethics as well. This is what the aspect that you have never studied in F7, F3, but this component is considerable for SBR aspects. Your ability should have to, sorry, your ability not only up to the knowledge of accounting standard. Yes, it should be accounting standard knowledge, but also with respect to the investor perspective. And regularly I say these things on ongoing basis. So this one is important with respect to this aspect, and um, that's all with respect to the revision of IAS 38. And take a 5 to 7, take a 10 minutes break. In fact, take a 10 minutes break. Then I will work out for um, IFRS 5. Then I will work out for IFRS 5. So take a 10 minutes break. And then I will work out for the IFRS 5. Candidates, listen one thing.